Hello and welcome to this week's economic update. My name is Lindy Pond and today is July 26, 2023. I share this information each week so you can be informed to help you maximize your real estate investing. Let's go ahead and get started. This week, we're going to first talk about existing home sales. So the June existing home sales, we were down 3.3% from last month to 4.16 million annualized, not a whole lot, down 18.9% year over year. The median home price is up from $396,000 to $410,000. Again, remember, this is median, so if we were selling more houses in the higher price range, that kind of moves that line up on the median home price. Inventory, not much has changed at all from last month. We're still at about 1.08 million in inventory. Currently, we're at about half the inventory levels where we were in 2019. This gives us a 3.1 month supply of homes. Normal is 4.6. 18 days on the market is the average. And then 76% of homes sold in less than 30 days. That was up from only 74% last month. So not a whole lot of change in inventory. On to the housing starts and permits. So housing starts and permits obviously all have to do with new construction. So permits, we're applying for permits to build in the near future. They were down 3.7% from last month and down 15% from last year. The starts, meaning I got the permit and now I'm starting to build, they were down 8% from last month and 8% more or less year over year. And then completions, I built the house and it's all done and it's ready to go on the market. They were down 3.3% from last month and 5.5% from last year. If we look at new construction, we are on an annualized pace to build about 1.4 million houses. Subtract out the $100,000 houses that always fall out of inventory each year for fire, natural disaster, they were condemned, things like that. That leaves us a supply on an annualized pace at 1.3 million. Household formations, though, were at a pace of 1.5. So you can see we're still in a short supply on the supply and demand. We're still in balance there on our supply and demand. Supply is still short from demand. Moving on to appreciation, which ties into our supply and demand problem. The FHFA measures home price appreciation on single-family homes with conforming loan limits. So no jumbos, no cash buyers. Prices rose just 0.7% in May. That is up 2.8% year over year. Home prices are now 2.3% higher than the previous peak in June of 2022, so about a year ago. Demand is still very strong. Inventory is still at record lows, which is supporting home values, thus the appreciation. FHFA is on pace for a 7% appreciation for 2023. Heard on the streets for the week, Lawrence Yun, one of my favorite chief economists at National Association of Realtors, he is almost always spot on. He says there are simply not enough homes for sale. The market can easily absorb a doubling of inventory. That would be a lot. Zillow Rent Index showed year-over-year rent growth slowed from 4.8% to 4.1%, so not a whole lot. There is a lot of new supply of apartments under construction, and this could soften the rental market further. The Realtor Confidence Index reports multiple bids, percent sold over list, and percent homes on the market all increased slightly from last month. Fed is expected to hike this week another 25 basis points. I think that was today, but it is the Fed meeting notes that we want to dissect. That's where we're going to get insight into what the Fed is thinking for future moves. Taking a look at this week's mortgage data, we went from 6.89 to 6.87, so that's a minuscule little movement, right? The DSCR rates are still anywhere between 7 and 10%, depending on your credit, LTV, and DSCR calculation. Let me know if I can help you with any of your real estate investing needs. I'm glad to help out wherever I can. Otherwise, have a great week. Get out there.